Good morning, everyone. I'm good, Attila. How are you? What's up, Marky? Alexander, Kevin. Morning to the folks on YouTube as well. Well, here we go again. Man, what a strange day yesterday and today. Weird as well. So, if we open, if we open above, if you look at the Klobex recording, I was talking about this. I said if we open above these single prints, they're still valid. So these single prints are a short position equals buying. So there's buy orders here. You'll notice on the last half hour bar we came right there and stopped right before 69.84 half. So if we open up here, those single prints are valid. Now, the practical reason behind that is because the supply that was available at night all got bought by covering short sellers and long traders. Let's see if these prints hold. Yesterday's run up caught people short underneath 69.80 for sure. Overnight inventory was, well, it actually never really got that short, but the point of control never moved down. It's been up there, right there, all night. Even though it came down, traded volume here, we still have our inventory in the overnight is priced here. So it's going to be an interesting morning. I advise you guys to sort of, you know, I was saying that these markets are speculative, very speculative. And I think, if you look at a chart of any one of these deals, right? I mean, you look at not only the ES, but go look at something like Western Digital. That's speculative trading. That's not institutions putting large positions together. That's not how institutions trade. So you see stuff like that, and you're like, oh my goodness, you know. Um, where was the other one? Oh yeah, ASML. Look at that. Just crazy. It's all speculative trading. Um, and that's just basically because here's Seagate. I haven't done levels for Seagate yet. But, everyone's positioned down here, and then the spec traders just take it and push it as far as they can go. And the problem with these kind of trades is retail gets caught here, the market just backfills, you get flushed out, and then it runs again. Very difficult to trade. Um, Spec markets. It's really not. It's not easy. So you have to, as a retail trader, you have to trade less. You have to make your trades count, right? You just can't throw something at the wall and hope it sticks. You know what I mean? So that's what we're going to be teaching you, and that's what we do in our trading room. Here we go. Let's see if we can take out the 69.85s. Hey, there's nothing wrong with waiting for a market to open and see where the buyers are and where the sellers are, right, Mark? You know, hey, Jam. The link is posted in the chat. Just scroll back. I'll post it again. There you go. Hey, Moran, how are you? Yeah, so if we open inside range, it might be a little choppy, you know. So you might have to actually, you might be forced to let it settle down a little bit before it finds a direction. So the nice thing about these markets and the way we trade at Trading Syndicate is we don't really care where the market's going to go. I mean, for our larger traders, we have levels and stuff. But for our retail traders, people who are scalping, short-term trading, we have really simple rules. You know, we look for trades that do the look below and fail, or the fail to look below, or the fail to look above. So you short, stop, cover, long, stop, sell. Really simple stuff. Hey, Juan, how are you? So look at that. The bid's right there. 84 and 3/4. Couple of ticks before VWAP, right? Yeah. Yeah, when you're talking big numbers like that, you are going to invite a lot of speculation. And, you know, let's face it, the speculators in this business are very, very well capitalized, very smart, and really, they don't mess around, you know? These guys don't mess around, and ladies, you know, they know what they're doing. They're very good at their craft. They have sophisticated electronic execution, algorithms. They spend millions of dollars on technology, right? Because when you're managing, you know, $800 million, $400 million, you know, they have budgets. So, yeah, it puts us at a bit of a disadvantage. But we always have our trade set up. And, you know, when it comes right down to it, we also have something called common sense. And that is really your most important and valuable tool in this business right now. So today's Wednesday, Thursday, Friday, a couple more days. Let's see, world events have been kind of crazy too. So the problem is if we get over the overnight high and the previous day high, you know, there's not a lot of inventory above us. You know, there's nobody like holding a long position, you know, over 7,000 because we were only up there for a couple of days. And that stuff all got flushed out when the contract rolled over, right? So, you know, futures is a short-term speculative market. And that's why sometimes you'll have a big flush down and then just a huge move right back up. Because once those sell orders are done, the market just goes right back up. So our method makes sure you're not short at the lows and long at the highs. Right. NFP Friday. Thanks, Rush. Yeah. Yeah, I don't know what 26. I'm not a fortune teller, so I don't know if it's going to be bumpy or smooth or I do know one thing is that there's never going to be a dull moment. There's going to be no dull moments. Okay. Yeah, everybody in the paper, I mean, I was reading the Wall Street Journal earlier. They said, oh, yeah, the AI thing, you know. I don't know. We'll see. Here's the thing, right? People will always give you their opinion, right? You can read opinions in Bloomberg and Wall Street Journal, but the only problem with that is you can't trade an opinion, right? People do all the time, right? People do all the time. They'll read something on Twitter or they'll read something in the newspaper, and then they'll go out and trade it. And then they just get crushed, right? Because that's not a trade. That's not how you do business. You don't go and say, oh, okay, this opinion says this. This is what I'm going to do. It's like you have no plan. You have no execution plan. How in the hell are you going to do that? You know? So what you have to do is you have to have, okay, what is the business reason for me taking this trade? That's what it comes down to, right? And the business reason for a trade is, if I'm going long, it means there's no supply and I'm going to be the supplier at a higher level. Or if I'm going short, there's too much supply and sellers are competing, like here, right? Sellers are competing. So I'll short, put my stop here, and look to cover down here. Yeah, you have to make sure the range is big enough and it's worth it, right? But, you know, that's true. Every time, Ed says every time I based on what somebody says, I get killed. That's because the person talking really has no idea what the hell they're talking about. It's easy to put out an opinion, right? It's easy to put out a stupid opinion, but, how are you backing that up? And what is your execution plan around that opinion? Like right now, I could say, I'm short biased. It's going to go down, right? That's great. So if I'm shorting it here, where is my exit? So if, say I'm short here, I know VWAP has buyers because we just came down here and tested it. So I'm short here. What am I gonna do if things don't work? Well, I know that there's a seller here, right? So if I'm short here and it takes out this level to the upside, that should be like a warning light on a car dashboard. Know what I mean, Jelly Bean? Yes? No? You guys, are you following along? If you are short, say at 86, and the market gets over 87, and then gets over 87 and a quarter, right? Your next sellers are going to be at 89. Are you willing to take that risk? Yeah, I'd put a stop, like in a slow market, you could use a tick. In a more volatile market, as it gets close to the open, you might have to use a bigger stop. But the thing is, if I know that I'm short here and it starts taking out 87 quarter, 87 half, most probably it's going to do this on the open, because when markets open, generally there are a bunch of, how do I say this politely, idiots who run and buy the open, right? And the market makers will raise price to fill them as high as possible, and then when that runs out, boom, the price drops. So trading to the short side on a day like this, or even the long side, because look at how small these candles are, right? Look how small these candles are. That means business is slow right now, right? So if business is slow, should I be sitting in a trade for a half an hour, right? A lot of people think when the market opens, it's like, it's like a race. It's like horse racing. You're coming out of the gate, Secretariat coming out of the gate. That's not trading. That's for fools, right? So if I was short 86, I'd be gone by now. You guys know what I mean? Yes? No? Right? Is this registering in your lizard brains? Right? The offer is lifting. Good, good. And that's simple. You don't need to spend 5 grand on software, right? And to know that when the price is going up, you shouldn't be shorting it, right? Because they're raising price because you see there's buyers, and you're selling what you don't own, where the people who own it are raising the price of it. Sometimes you got to think things through. The old, oh, it's too high, it has to come down. That 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 that's not the mechanics of trading. You know? Hey, Jab, what's up? So, yeah, and you got to keep your losses small because losses are business expenses. And what happens to businesses who spend money like drunk idiots, right? Businesses that spend money like money doesn't exist and it grows on trees, they don't stay in business too long, do they? Hey, Kevin, how you doing? How was your holiday? Ready to get back to it? Yeah, you got to keep your expenses low as a business person. It's just, some things, sometimes you got to use some common sense. I know it's not popular, right? I know it's not popular, right? But you have to do it. Common sense is boring. Good trades are boring. And the other thing you have to do in this market is if you make a little money, don't frickin' go and give it back, right? If you're a brand new trader and you made 150 bucks, keep it. Because you're not going to make 5 grand in a day, right? You don't deserve to. Don't have the skill to. There's no way in hell you're going to do it unless you get completely frickin' lucky. And that is not a business strategy, right? How long do you think the speculators will run the market up? Until they run out of buyers, Christian. And sorry, I owe you a call. I've been a little busy and a little sick. Uh, this stupid cold. They will run the market up as long as the suckers keep coming in. Right? And when we run out of buying, and that happens exactly, you're seeing it happen now, right? In a smaller time frame. Check this out. Okay? They just took it from 85 up to 87, but we ran out of buyers here. So they're under 87 now, right? You know? Yeah, it's pretty crazy. So you will see that pattern repeat itself over and over again, right? Because the market never changes, right? It just gets more efficient with technology, algorithms, electronic execution, right? But the business of the market will never change. It's create supply and try and get you guys to buy it. In a perfect world, we'd like you guys to buy it, piss off, and come back next month and buy something else. Right? If you ever if you ever have worked in a boiler room, if you walk up to the head trader of a boiler room with a sell ticket from one of your clients, they're not going to take it. You're not allowed to sell, right? The algo stuff makes things much, much easier for us as retail traders because algorithms aren't emotional. And if you tell the algo to stop selling at 69.86, it will stop selling at 86, where a human being will continue to sell it down to 84, right? To the tick. Now, for us, in a slow market, not this slow, but in a slower market, it's great because we can manage our risk knowing that, say we're going long here instead of short, right? Say you're thinking a look below and fail of 86 quarter, right? Well, the trade is long 86 3/4 half, stop under these candles. Your first target's going to be there because there's sellers there. You just saw them sell here. Why wouldn't they sell again? These people who are trading this are not trading 3 contracts. They're trading thousands of contracts. So they are going to sell there, and then the next target would be here and here. So that's how you trade. And if it takes out that level and you're long here, why would you be holding it if it's going like this? Because your inventory is priced here. The business reason was to sell it here. If the market's offered for sale here, your inventory is mispriced, right? That's what the business is, folks. It's the distribution and accumulation of inventory. So you want to be on the right side of that. So you need to know where the inventory is priced, and you need to know whether they're in accumulation or distribution. And people will go, gee, JJ, how do you... Accumulation happens at the lows and distribution happens at the highs. Think about it. If you had a corner store and you were selling Coca-Cola, how much is Coke now? I don't even know. How much is a can of Coke? Anyone? Okay, we're at all healthy people here who don't drink Coca-Cola. What does a can of Coke sell for? $2, right? So if it's selling at $2, $2.50, $2, the guy who's selling it to you didn't pay $2.50 for it, right? Let's say it's $2.50. So yeah, they paid less for it, and they're selling it to you for a profit. Right? So what this means is, and keep this simple, you don't have to overthink this, is when the market has a cost basis here, and we go deep into the discount zone, this is 2 times discount. Do you want to be shorting it here at the edge of the discount zone, or do you want to be going long on a discount? And conversely, when the market is distributing this inventory up here at 97, which is at the top of the 2 times profit zone, do you really want to be going long here? That's why breakout traders barely ever make money unless they're really fast, because these markets will have a breakout and then right back in, and then you get stuck here. The reason is because the people who are long here will sell everything. They will hit every single bid that they see at 2 times profit because it's a profit business, right? And this is why you guys need to start making some money and keeping it and getting used to getting paid. The reason retail traders fail is because they are trained to lose. You guys are trained to lose money. You have terms like FOMO and revenge trading and tilt, and those are all just excuses for horrible business practices, horrible discipline, lack of knowledge. It's a cop-out, and it's bullshit, right? Those words don't exist in business. There's no FOMO and revenge. Have you ever heard a baker going, I'm going to do some revenge baking? A lawyer going, I'm going to do some revenge torts? Oh, I'm a neurosurgeon. I'm going to do some FOMO brain surgery. Think about it. This is the stupidest crap I've ever heard, right? Don't tolerate that bullshit. Be a professional, right? Now, if you're doing this, like, today I'm going to learn how to make banana bread. Tomorrow I'm going to learn how to do, like, needlepoint. Then, I might learn how to be my own DJ, and then I'll do trading the next day, and I'll be on. That's a different story. You do it for a day, you lose $500, and then you never come back, right? So, yeah, Hex, let's keep the politics out of here, please. Please. I don't need. I'm an old man, man. I don't need the stress. We don't talk politics in the room, okay? Thank you. I'm just going to delete that before Steve does. All right? Thanks, brother. All right. So, yeah. See, we moved off the 87 where we went right to 89 where I said the sellers would be. They sold right into it. Right? Right. We need. That's okay, Hex. That's okay. I get it. Got to blow off some steam. Yeah, let's. It doesn't matter to us anyway. I mean, unless you are like, a senator or something like that. And even then, it's a trading room. Anyway, so it looks like we're going to open in this little balance range. The balance range is the cost basis from the overnight, and that's where I got it from. It was a distribution balance. We put it on sale. When we put it on sale, buyers came in. Right? That's another thing. When markets go up, they attract buyers, but when they go down, sometimes that discount will bring in buyers. And you'll see that the bid was here, then it moved here, now it's here. You guys see that? Now this is a simple 1-minute candle chart. How do you pull so much information? You know where the sellers are, you know where the bids are, but you don't need to have all these trading tools they try and tell you. Order flow software is the biggest scam in the world. Right? Order flow software is a scam. There's no such thing as order flow software. Right? A trading chart is a sales chart that shows you how sales are going. So it tells you on a minute by minute level here, when we put the price on sale, buyers came in at 85 so we could raise prices. Right? And we're off. Alrighty, what are we going to do here? What are we going to do? Chop. Let's see, there's a stop here. We're going to take that. That's going to run it. See, yesterday's high, overnight high, today's high, all at the same place. Right? And they're selling into that. Right? They're selling into that. So now if you're short, well, I don't know. Let's see, if we stick over 90, be careful on the short side. Okay, now if you come back under 90, look for that. For us to come down into this 85, 86 area. Right? So if you're short 88, 89, right? I'm short 87, 81. I'm covering 86 and a quarter. And I'm flat at 86 and a half. Just on a couple of micros, right? Because I saw that was a look above and fail, and I was looking for target 86. I covered before VWAP, okay? That is a fast trade. That is a trade I've screwed up many a time. So don't follow me into these trades, right? Unless you're quick. Going to come down, and we're going to test that 85 and 3/4 bid. We filled it. Now let's go and see if that 84 and 3/4 bid holds, okay? Trading is very simple. It's not easy, but it's simple, right? The market rotates up when it's looking for sellers. It rotates down when it's looking for buyers. There's nothing else. And nothing else will save you other than common sense. Right? That's why we repeat the same trades over and over and over again, because after a while you start going, oh crap, if I took it here, it's kind of slow. I might have to wait. Look below and fail of 86, sellers at 87, next seller is going to be at 89, target will be 90 if we can stay over these white bars. You see, it's simple. I'm not long. Right? So if you're a person who's emotional and can't control themselves, okay, it happens to everybody. Nobody's immune, right? If you're emotional, if you need money badly, don't trade. Don't trade real money because you're going to screw up and lose it all, right? It's only a matter of time. You cannot trade from a position of desperation, okay? Desperation is going to take you, and it's going to take you out to the woodshed, and it's going to beat the holy living shit out of you, okay? Don't be desperate. You have to practice this. It's a skill. You're not going to be a trader, make $1 million in a day, and retire. That's not how it works, right? So you have to practice your trade setups. We filled a couple of signal prints, and we found that bid. The bid is from here, from 80.5 to 84, right? Let's see if we could get under VWAP, right? Generally, this market is speculative, and to take out that 69.94, we're going to need to trap enough shorts here to push. But right now, I'm not seeing a big buying push because I see the offer moving lower. So if the offer is moving lower and it comes into these signal prints, it's going to find a buyer somewhere to here, and then it's going to move up. When it moves up, then you look for the next sell candle, right? So watch, the next candle is going to open. If that candle can't get to 88.25, then you can take a short. See, there's 88.25. Just as I said it, it hits 88.25, but we know there's a seller there, right? We know there are buyers at VWAP. We know there are sellers here. So that's a tight range. If it gets over 86.25, they'll move the ask price up to 87.25 if there's enough buyers. If it's really choppy and slow like that, see how they're raising the price really slowly, right? So if you're short 89 and you covered 85, 84, smart. If you're short 89 and you let it come back up on you, dumb, right? Take your profits. Take your profits. Get used to getting paid. Once you start making even $50 a day and keeping it, you'll be really pissed off at yourself when that $50 doesn't come, or $100, right? Because retail traders, oh, I blew up an account, I lost money. I blew up an account, I lost money. I blew up an account. That is the worst thing to do. Blowing up accounts is not okay. And I see these fools on Twitter going, oh yeah, you got to blow up accounts before you blah, right? Those guys don't know their ass from a hole in the ground, right? So if you were short 89 and you didn't cover at 86, as Goldmember says, there is no pleasing you, right? VWAP is going to have buyers there. Keep it really simple. Learn how to make some money and keep it. And you'll be really pissed off, if you take a wire every week or every other week and you do something to stop that pay process, you'll be like, oh shit, I'm responsible for this, right? Now, on this move down, did we trap enough shorts under 87.5 to push up and take yesterday's high? Right? This is a business of leverage, right? When you know someone is in trouble in this business, it is your moral obligation to take advantage of them. That is how trading works, okay? So get used to paying yourself. Even if you make $5 a day, you're making $5 more than 90% of people who are trading, okay? Get used to getting paid. Take winnings out of your account. Do not try and grow your account. That is a fool's game. Nice trade. Growing your account when you don't have the skill is a fool's game. Yeah, so stick to trading 1 micro, man. It takes time to put on size, right? And if you are trading 2 or 3 micros, and you get log, like if you were log at say 87 with your stop at 86, sell one at 88, sell one at 89, sell one at 90. And if they don't sell, get the hell out. Right? You got to be, I'm not going to lie to people anymore and tell them that it's okay to blow up accounts. It's not okay to blow up accounts. Where in the world can you go and work at a business, ruin that person's business, and everything's okay the next day? Oh, I have a tire store and I sold only 3 tires or 4 tires today, right? So I'm going to burn my store down and do it all again tomorrow. That's not how life works. It's just abject stupidity, right? That's not how finance works, right? Funded trader accounts are great for learning discipline. Where they're bad is people treat them like PlayStation, and just keep resetting them and resetting them, and they never actually learn discipline, right? So if you are trading funded trader accounts, and you know what I mean, like, you know, Take Profit and Apex and all those guys, you know, do yourself a favor, right? Come into our room and learn how to do things properly, right? We're tradingsyndicate.org, right? It's not okay to blow up accounts. It's not. You know, we have the best AI trading coach in the business, and we have me for live coaching, right? So you're not going to get bad information. You know, you will get good information and you will get proper instruction on how to do business, right? We're not a trading room that have a bunch of 19-year-old bros in there pounding their chests going, oh, I made 50 grand today. We don't have that. We have regular, normal people who want to make a living and pay their bills. That's what we specialize in. Now, if you are young and you want to get on a trade desk, you can come into our room too. I've helped people get into institutional trading jobs. But if you're just a regular person who wants to pay their bills, this is the place for you. Yeah, this is not some kind of hype trading room. I'm not going to be putting out stock tips, right? No alerts. Oh, no, you have to buy my software to have this happen. You know, we're not charging you $300 a month. All that crap. Mr. Simpson, first let's get you a job at McDonald's, brother. Then we'll try a trade desk, okay? Right? I can help you get a job at McDonald's. Looking for $69.94 quarter. Okay? I don't even know if a McDonald's will hire you, man. That clown's pretty strict. You know? That clown's pretty strict. Where's that upper stop? There it is, right there. From that day. Yeah, you know. Hey, McDonald's don't screw around. You know, I haven't looked at the price of McDonald's stock in a while. Right. So, right, they're selling into this at yesterday's high, the overnight high. So if you're looking for a breakout, your breakout trade is going to be from 92 to 94 and a quarter. There we go. There's your breakout trade. Right? There's 94 and a quarter. And we're right through that. Now, everyone's caught short underneath yesterday's high, the overnight high, and today's attempt at that high. Hey, DC D2C2. Welcome back after a year. Take it slow. Maybe come check out our room for a month, see if you like it. We'll get you back in the groove. Right? And now, if we stay above 69.94, and we're not right now, if we stay above 69.94, we just ran the stop and they sold into it. Right? So that's a breakout. You guys call that a false breakout. Where I'm looking for is I'm looking to see how many people come in and buy 92. If they don't buy 92, it means they've seen sellers and this thing will drop back down to 89. But if we can't break 92 and yesterday's high, that means everybody, their dog, their pony, their parrot, their owl, they're all stuck short under 92, and you'll see volume start to build out here in the 92 to 93 range. Yeah, it's good to have you back, Ed. Post in the room, brother, if you can. I've known Ed for years. Back when he was in Arizona. Speaking of Arizona, this thing's rising like a phoenix from Arizona, as they'd say in Seinfeld. That seller's still there at 94, okay? They're not aggressive, but they're still there. Now, this kind of price action, what this means here is distribution. You run that stop, that brings in buying. That brings in the FOMO longs. And if you can stop selling at 91, you can take this and go sideways and sell it up here, you see, for profit. That's what's happening now. That's why it's not really ripping. There's just enough buying to keep it over 91.5, but not enough to rip it up to 98. So the people who are long, where the inventory is priced, right? Say if you were long 1,000 contracts here, you'd be selling them very beautifully up here. That's called distribution. It's a market. Distribution is the name of the game. Now, if we stick that 94 and 94 holds, be really careful on the short side. Because if enough knuckleheads short it here between 92 and 94, and they lift that offer to 95, 96, it's basically like dangling red meat in front of a lion cage. Right? So watch out. Watch the offer. The offer is that red line on both charts. That thing starts going up. See, we have a seller at 95. Right? We have a seller at 95 and a quarter. See? They lifted. Boom. Now they're sweeping the book. They sweep the order book, bid, sweep and bid, sweep and bid. The algos do it effortlessly. Right? Now if you're short under 94, you go to cover at 96, they move the price up to 96 quarter, 96 half, 97. Right? This is how this works. There's no magic in this. But all you got to do is spend some time, right, and listen. And then watch these charts, use chart replay, rewind my videos, ask me questions, right? Put together a decent trade plan. How am I going to do business, right? Now, what trade setup do I need to do business intelligently, right? How do I manage my risk? When I start trading, I'm not going to make any money, right? That's delusional, right? So when you start trading, use the simulator to get to learn the software and train yourself on good habits. Just like a pilot. Like if you're in a plane and the pilot goes, ladies and gentlemen, we're going to encounter some turbulence. I really don't know what the hell to do. So just hold on tight and let's hope you live. That airline's not going to be in business. You can't trade like that. You have to be prepared. You have to train yourself. Right? You have to train yourself how to react. That's all it is. And because this business is repetitive, you just keep training yourself over and over again. Now, look above and fail of 97.5. 7,000 is just lurking there, isn't it? Oh. Untraded pocket 99? Thanks, Brian. I did not know that. That's on the old contract, though, right? All right. Look above and fail of 97.5. If you are short, put some bids at 94, 95. Right? If you're short 97, you're using 98 as a stop. It's a scalp. It's a scalp. You're not going to make 100 grand on that trade, right? Because you're shorting the backfill, right? Now watch the offer. Look at the bottom of these candles. Bing, 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 bing. They're all higher. That means the buyers are following the sellers the way kids chase an ice cream truck. Right? So we backfilled down to 93. So if you were short 97, you should have covered here. If you're still short and it keeps going lower, put your next buy order at 93 and your next buy order at 92 quarter. Okay? We will tell you step by step where to take the trade and how to take it. Right? Now, if you were short 97 and you didn't cover 94 and take those 3 points because you were looking for Lamborghini money, well, that's just stupid. It's a stupid business decision. Right? You can't hope and wish and pray that your trades are going to work. Right? The chart is telling you where the buyers are, and the chart tells you where the sellers stop selling. That's where the buyers are. Right? Now, if you're trading a larger account, right, and you are short and you didn't cover, you could sell some more at 96. Mind you, your out is still 69, 99, 98. Right? Even if you're trading a lot of money, unless you really want to put spend 100 grand and put it to this trade. Right? We kind of see a backside here, Dan, but it's not confirmed yet. And because we're so close to all-time highs, right, I recommend scalp shorting until you see an aggressive seller. An aggressive seller will bring us back under 91. I would prefer a position short under VWAP. But right now there's just too much responsive buying on the backfill. The backfill are the red candles that you've just seen. Right? Now, common sense is screaming short and it's too high. The chart is telling you, hang on, bud. Right? We come down to that 93 half level, and all of a sudden, price goes back up. That means the sellers' algorithms have seen the bids there, and they're raising price to get them to chase price higher. Now, the only thing that's saving you if you're short is that low, that high, that high, that high, and that high are lower. If this candle takes out any one of these highs, be careful. Right? We have sellers competing, but they compete down to here, and then they lift. All simultaneously. Now, if you think these markets are rigged, it's not that. It's just that everybody trades the same way. Right? We are all taught one thing on the other side. You guys look at all sorts of different crap. So if you're still short, right, because of those candle highs, put some bids here at 91. And if you could get a fill at 91, you can bid 90 and see if you can get a fill there. Say you're short 10 contracts at 96. Right? This is how you trade. You trade with intelligence. If you're a short-term scalper, you traded 96 down to 94. If you have a larger account and you are good at handling a position, you could sell it, add on the ups, and cover on the downs. Right? But that takes skill. It's a lot easier to say it than do it. Right? So if you're short 94, your stop is you're really okay until we take out that 93 3/4. I would put some bids here. There's going to be buyers at VWAP. So there are going to be buy orders sitting here from the people who are short here. Right? So that's why you're getting responsive buying as it comes down. Right? Good stuff, Dan. Good stuff. As it comes to the previous day high, remember there were people that were trapped short under that previous day high. So as soon as we came close to 91, they lifted the price right back up to 93 and a half, right? Right? And this software that these firms use is so good, so fast, that as soon as it senses a large buyer at 91, let's see if they pay 93. They will, because people will chase it up. Right? If you're long off of the 91s, or like if you're long off of that candle, your stop is underneath the previous day high. 2 points is 2 points. I'll take 2 points on 5 contracts all day, every day, and I won't complain. Right? 2 points on one E-mini is $100. 5 contracts, that's a $500 trade. You do that once a day, you make 10 grand a month. Right? And that's, of course, before expenses. Right? And I know for damn sure retail traders are not making 10 grand a month when they start doing this. Right? Teach yourself how to make money. Right? Let us teach you how to make intelligent business decisions. Right? All you have to do is pay attention and really do what you're told. And focus. Right? That's all you need to do. Okay, so we got a seller at 95. Right? The sellers were there, they moved here. Let's see. I'm thinking we're going to retrace a little bit because the price action has me a little, it's kind of looking like there's a seller at 96, 97 and then 95, right? So how long can we hold this price before all these people start puking? Let's see. Thank you, Dad. Exactly. When distribution happens at 1 times profit instead of 2, it means the short bid is not that strong. And here's the thing, Hex. If you're long 500, 1,000 contracts, if you're a size trader, you will do business where the market allows. You learn that very quickly. See, retail traders, they want to buy it at $5 and sell it at $100, right? But the thing is, smart money knows that you have to buy and sell where you can, right? Because you have to trade size. So, if you're long 100, 200 contracts at 93 and it's at 94 and a half, you're selling them because you have to distribute size. And you're not going to be a dick for a tick, right? You will sell, right? You'll put sell orders out. If they get taken, you just keep selling. If your sell orders do not get taken, you will hammer every bid that you can, mercilessly, right? I tell you guys something. The last thing you want to do is be on the other side of me when I'm a size trader, right? Because if I have to move 1,000,000 shares for a client and you're in my way, I will walk over you like you are an ant. I will crush you and your bid, right? So you have to understand, like say somebody gave me an order to sell 5,000 contracts, right? Here, and I see a bid for 1,000 at 92, I'm hitting that bid. Because I got 4,000 left to sell. And if you're in my way, I will go right through you. Right? Like you're a wall made out of paper. Right? This is distribution. Look how choppy it is. Right? The short-term position pre-market is here. You can see it as plain as the nose on your face. This is distribution of this inventory. This difference is profit. Wholesale size traders do not look for a 30-point move. If you run 10,000 contracts through a one-tick spread, do the math. Right? How does it factor into my decision, D2? It's called liquidity. doesn't cost me anything. I'm working an order for a client. My job is to execute the trade. It's not my position. Even if it is my position, if I'm long at 69.80 and you show me a 92 bid for 1,000 shares, you bet your ass I'm going to hit it. Because I'm not long at 97 selling at 92. Know what I mean? He who has the lowest cost basis has already won. Shorts are trapped. They're holding the market up at the previous day high, Moran. Exactly. Exactly. Right? That was funny. The bid is going to visit you. I was thinking like the ghost of Christmas past. The bid of Christmas past. Right? Yeah, my friend. When you're a size trader, you're generally trading for someone who has purchased it at a much lower price. Like even if I was long 500 contracts at 87, I'd be selling them at 92. And if you show me a 91.5 bid for 100 contracts, boom, I'll hit that. I'll hit that all day, every day. Right? And that's the thing about retail trading. You guys don't realize that size will execute where it can. If they only make a tick on 1,000 contracts, that's 12.5 grand. So if you make 1 point on 1,000 contracts, do the math. Right? They're not trading 2 or 3 micros, these people. So B period, the second half hour bar is open. See, and look at that. See how the B low could not come down to the yesterday's high and the overnight high? Now, let's see. This stupid volume thing is in the way. Hate when it does that. Okay, there we go. Finally, we've got a sell order down to the open, straight down. That's one big sell order. Didn't I just tell you? Right? The news came out, right? And somebody said, oh, crap, I want out. Boom! Then they sold right into it, right down to 86 and a quarter. Actually, 86 half. Right? Well, if you could prove yourself, there'll be lots of places that'll let you trade 1,000 contracts. But, you know, they're not just going to let some joker off the street, oh, here's $2 million, go nuts. Right? So off of that news, now let's see if we can fill those singles. Right? There you go. There you go. Now we're underneath VWAP. Can we stay under VWAP? We know there are bids at 84. Right? So that's good. We worked out yesterday's high, right? That's good. That business is done for now until we get back up there later on. I'm just kidding, joking. Right? Now let's see if we can come down and tickle 69.84. Right? That's a beautiful trade, 95 to 86. I wouldn't throw that out of bed for eating crackers. Right? Beautiful. Nicely done. Welcome back to the market. Now, let's see where the sellers are. It's going to come up. There's a seller at VWAP. Right? I got to say I'm pretty short biased right now. Right? I'm pretty short biased. So, let's see. If it stays under 86 and a quarter, you can be short. But there's going to be some buyers at 84. Right? So if you're short, say 85 and 3/4, put an 84 half bid there, right? See those bottom candles there? Boom, 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 boom. Right? Don't be afraid to cover. Don't get egotistical with your trading. Take the money. Boom. Short 85 and 3/4, covered 84 and a half. Not the greatest trade, right? If you got more contracts, I only did one contract. Next bid's going to be 82 half. We are filling the single prints. The short sellers that are bid, they see sellers and they're going to drop their bids. Their bids were here, they dropped them, right? And the sellers went and hit whatever was left, right? So that's why it doesn't sell off smoothly, because it sells off into buyers, goes back up, sells off, goes back up, sells off. So let's watch that. Oh, right? Under 84, we're targeting 82 half. Got to do this in steps, right? 82 half breaks, we'll be looking for here. Just under 81. No kidding, eh? When the news causes drop like that, the size traders are selling. So Hex, you and Raj and Alexander and I are all selling at the same level, right? That news comes out, Raj gets itchy feet and offers lower. As soon as I see Raj offer lower, I'm going to hit every single bid there is. Do you understand that? Because you guys don't have, the other thing that retail doesn't have is a sense of urgency, right? Because you guys are like, do, 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 right? But in an institutional trading environment, if you don't hit that bid and you don't get your client to fill, that's the last trade you will ever do. It is not a forgiving business. And they do not suffer fools in finance. So if you can't get shit done, you're fired. Right? That's exactly how they talk to you. Right? I gave you an order to sell 50,000 shares. Where's my fill? You have 30 seconds. Right? And that's in the old days of trading on the phone. Right? So you're not sitting around with your thumb up your, do, kind of daydreaming, right? There's a sense of urgency. You guys need to have that sense of urgency when you're doing business, because everybody else does. Right? Everybody else does. Right? That big red candle, that was a couple of orders hitting the tape, and the order book thinned out and it just dropped. Right? Yeah, if that helps you trade, pretend that you're trading for a client. And your client's like my client, like one of my first clients was the Penguin, who was just a ruthless son of a bitch. And he would buy stock at discounts. We never paid retail for stock. So if there was a mining company, the stock was trading at $3. This is a look below and fail of 86, looking for 89. Next target is 90. Right? So you never pay retail for a stock, right? That's a fool's game. What you do is stock's trading at $3. You go to the company, they always need money, right? So they want like $1 million. You go, we'll give you $1 million. We want the stock at 90 cents. They'll say sure. Right? So it's trading at $3, and if it's not moving, we will sell it down to 90 cents so fast that it will make your head spin. Because that's what we paid for it. That's our cost basis. Right? And we don't care if we break the company. Companies are made to be broken. That's how it works. It's the law of the jungle. Because if you don't, somebody else will. Right? And the thing about buyers and sellers fighting each other is that's another stupid thing. Right? Sellers compete against each other. Is it legal? Yeah, it's legal. It's called finance. Sri, you should go do some reading about Wall Street and stuff like that. Right? So that's how you guys are buying stock at 50 cents, $1, $2, $3. The person who's selling it to you paid half a penny for it. Right? If you're not on the inside, you're on the outside. Right? That's the way this business is. Right? And if you're on the outside, like we are on the outside. I'm on the outside now, so it's harder to make money on the outside. You could buy it at a discount and sell it at market price. It's going on every day as we speak, Attila. That's how finance is. Right? That's finance. Nobody pays retail. I want to buy 1,000,000 shares of a $5 stock. I'm not going to pay $5 for it. What are you, nuts? Right? That's why they call it smart money. All right. Come on, my sellers. Let's take out these 80s. Let's get down to 80. Oh, another big sell order from 89 down to 86. Cost basis is everything. How much did you pay for your product and how much are you selling it at? If something's selling at $5, I don't think, oh, I should buy it at 5 and it goes to 7. It's like the first thing the Penguin, I'd say, hey, this guy's got a deal. It's trading at $5. The first thing he would say is, hey, can we get some cheap paper? Right? I got $5 million in the Swiss bank account. Tell him that we'll buy $5 million worth of stock at 30 cents. Right? Or we'll give him $1 million at 30 cents. He'll take it. CEOs will take it every day, all day, every day, because they go through money like poop through a goose. When was the last time you met a CEO that was fiscally responsible? Especially in this day and age. Look below and fail of 86 quarter. Seller at VWAP. How long can this go on? You don't pay retail for stock. I have never paid for stock in my life. I get it for free when I work on a deal. First rule of this business, you don't pay for stock. Why? Because they give it to you for free. Under 86 and a quarter, let's see if we can get down to 83. Oh, no, bids at 85 so far. Man, it's getting choppier and slow. Come on. Be a normal market. Start selling it off a bit. Come on. Don't keep those shorts waiting. Shorts are sitting there at 83 like hungry dogs waiting to be fed. Right? Overnight inventory was short. Overnight inventory was short, Dan, because most of the trading was below the close of the previous day. That's another reason why it's now corrected inventory. Right? Because we're underneath the close. Here we go. Come on. You see how that green box, they're buying it before the green box. That's called front running. Right? Right? The best is when you do a floorless convertible debenture. You give a company money at a certain price, like a 30% discount to VWAP, but it resets as the stock keeps going lower. So the lower the stock goes, the more stock the company has to issue you. That's called dilution. That's why sometimes you guys buy a stock at 5 and it goes to a nickel, because they diluted the crap out of it. Because a lot of these companies, they don't make money. So how do they keep the lights on? They sell stock at a discount. 83? I don't know, Dan. I'd look for a look below and fail of 78 quarter the way this is trading right here. Had a good day. Nice work. Save your money, man. Like the song says, take the money and run. Take the money and run. I've done 3 scalps today. I haven't even traded the mini yet. Single print data is based on a lack of supply. Oh, delta. I don't know what single print delta is. I have no clue what that even means. Single prints are a market profile term. They're not a delta term. Single prints are when the market takes a high and doesn't come back and retrace it. They're going to be trapped shorts here in this green box. It has nothing to do with delta. That's okay, Dan. That's okay. Hey, Doc, how you doing? So basically, on a grander scale, this is a look above and fail of yesterday's high and the overnight high. Right? And if you're short, the high of those candles, look at the last 6 candles. The high is all lower. That means the offer is moving lower. There we go. See, my short bias was right. It just takes time. So say you're short 86, cover some at the 83, 83 and a half. Right? There's still bids there. It's taking time to fill those bids. What is my average size contracts? Okay, when I start trading at Teller, there's a document. Go into JJ levels, go at the very top. There's a 5-step document process that we do every single day. So when I first start out, I trade the micro. I take 2 or 3 trades on the micro. If I lose money, if I screw up, I stop trading and reassess. If I do well and I keep trading, then I'll switch to the midi. Now, depending on my level of confidence in the trade, it's usually 3 to 5 minis. My usual position size never maxes, usually 10 minis. That's usually my max. Looking for 69, 78 and 3/4, Dan. Right? I don't need to trade a lot of size to make money because this market pays really nicely. I don't look for home runs. I like to make a little bit of money every day. Over time, it adds up. And as soon as I make a bit of money, so my rule is, if I make $1,000, if I give back 100, I stop trading. That's it. I got a 10% rule, and if I'm done, I'm done. I'm done. Right? That's it. I get up and I walk away. And that helps you manage your emotions. If you don't have the discipline to do that, right, and you're trading and your wife's at home or you have somebody at home, have them grab your computer mouse and run with it. Right? Until you learn how to discipline yourself. Fill the single prints. Beautiful. Now let's see if we can take out that overnight low. Right? Couldn't quite get down to 78 3/4. Right? The shorts are covering here, right? That green candle is short covering. We opened the door at 69.80 and the buyers came in. Let's see if they continue to come in. Right? So the trade I would like is this. If we go underneath and come back up, right? That's a look below and fail. Right here, I'm not going to touch it. You will notice that smart money doesn't just trade and trade and trade. That's for suckers. Okay? There's the look below. 38 seconds left of this candle. Right? Now, my usual mistake is to go buy it right now. Right? To go buy it right now and put my stop at 78. I have learned in slower markets to let the market open the next candle. And if I miss the trade, I miss the trade. Right? See, look, if I had gone long at 80, I'd be getting stopped out now. Right? So my whole thing is to go too quick, get stopped out, and then the trade work. Right? So if we accept under 78, I'll look for a look below and fail of the overnight low. Here's the next candle. Where does this candle top out? Because we know we got sellers here, right? Do they sell into it at 81? They do. Look, there's the seller at 81, just as promised. Right? There they are. So on the look below and fail, I'm looking to get long here. I know there's a seller at 81. So if I do buy this, I want to try and buy it as low as I can, right? Because I know the shorts are still bid, right? So if I'm buying 80, 79, 80, I'm high, right? I know the next sell order is going to be at 81 and a quarter. So put an 81 and a half sell order on. And if that gets taken out, then you know it's probably going to go to 82. If we can't print 81 and a half, start getting out of the trade because the sellers are going to push price lower. See? See? Look at that. See? Watch the offer. And if the offer can't even touch 81, you know the sellers are competing and your trade's not that great. Do you see what I'm saying? It's slow enough that you can see it, right? And Jiraj, you might have to do that today, right? I'm telling you, this is a harder market to trade, right? So there's a touch of 81, but that seller is still there, right? We got to clear out those 81 offers before we can print half and then go to 82 and a half. Now let's see where the bottom of this candle goes. Sometimes even the trade looks like it's there, but the order flow doesn't support it, right? The order flow doesn't support it. Right now, you know there's a seller there. The look below and fail is a great trade, but the order flow is not supporting it now. See? There's like a wall right there at 81. And you don't need any kind of it's a simple candle chart. See, the next candle, the high is here. So the sellers moved from here down to here. Right? So if you had bought 80 and scratched 79, 78 and a quarter, that's okay. Right? Let's see if it works again. Right? This is another thing. The other type of price action that we've been seeing is chop. It'll go to the edge of a zone and it'll just sit there and it'll drive you nuts with this back and forth chop. When it starts doing that and you get stopped out a couple of times, once or twice, sit back. Because now you know the business, as Jiraj says, I would go rather long, maybe 82 to 85, right, if they can put it together, right? The other thing you could do is larger traders will build a position between 79 and 80. So I just bought 80 and a half. I sold 82 and a half. I got one left, and I'm out at 82 and a quarter. Okay? Why did I buy 80 half? Because that candle did not take out that level where the sellers were. Tiny little details make the difference, right? Tiny little details, right? And I'm scalping because I have no idea what the hell's going on. On a larger time frame, right, I don't know what's going on, and it's the first week of the year. So I will rather go and pick up 50 bucks here, 100 bucks here, 300 bucks here, and just kind of wait, right? Once I get a sense of what's going on, then I can understand a little bit more and hold trades longer. But if you are in doubt, right? If you are in doubt, drop your position size. Drop the number of times you trade, right? Right? So if you had built a position between 79 and 80, your out would be 78. And if you didn't sell those 82s, you're fired. Right? This is not a market that you want to be stupidly greedy in. Okay? You want to be long-term greedy. Make a little bit of money today, make a little tomorrow, make a little the next day. You don't have to make money today. Old man Thompson taught me this. This man was worth $600 million and he took the bus to work. Okay? And he made his money the hard way. All right? He said, kid, you don't have to make money every day. Just don't lose money. Because the business is going to be there tomorrow. And he said, if you fuck up my business, I'm going to kill you. So don't lose money. Right? There's a seller at 83 halves, Josh. That's all it is. Could be trapped longs, could be wholesale inventory. Doesn't matter. But there's a seller, and they're competing. Right? That's all it is. Remember our simplicity thing from last year, right? You don't care who the seller is. It could be your grandma. Could be your grandma sitting on the offer with 1,000 contracts, right? Doesn't matter, right? So we're holding this 2 times discount area so far. Now let's see what the cat drags in the next 5 minutes, right? So this is what we learned. The market's slow enough today. Even if you didn't make a lot of money, go replay this video, go replay your charts, make notes, think about where you executed. If you did well, write that down. If you didn't do well, write that down and show where you could have been. What did I miss? You always miss something. Even people who've been trading for 30, 40 years, they can't see everything all the time. You are going to miss things. You are going to make mistakes. So go back and dig into it. Okay? If you're hesitating when you're executing, right? And it's sometimes you could be hesitating just because of common sense. Sometimes you could be executing because of lack of discipline. I've had both happen. So keep track of that stuff, right? And if you write things down, then they become concrete. You can be aware of them. Good stuff, Hex. Another good day. Keep it up. Keep it up. Oof, what a chop fest this is. I think if we can stay under 80, we'll go down and try and tickle that overnight low, right? I mean, overall, I'm short biased, but I don't want to sit in a short for 6 hours. A lot of the times I'm short biased and I end up trading to the long side because the chart's telling me you might be short biased, but for now, you're going to have to go long, my friend. My pleasure, Montreal Trader. Good to have you with us. And I invite you folks to come join us at tradingsyndicate.com or .org, sorry, .org. It'll be the best $30 you ever spend. And come in, talk to me, we'll chat. I am taking people on for one-on-one coaching too. I offer a lifetime one-on-one mentorship program. And I work with you every single day. So if you're interested in that, if you want to level up your trading, if you're serious about it, reach out. I'm vwaptrader1 at Gmail. I'm vwaptrader1 on X. And I'm always in tradingsyndicate.org. We'll get you profitable. Right? It'll take some time and some hard work, but we'll get you there. Let's see if we can get past those 84 sellers now. So we couldn't get down to 77. We couldn't stay under 78 3/4. Thanks, Arcroy. And oh, by the way, these levels, these balance levels are Arcroy's levels from like 6 o'clock in the morning UK time. So that this balance zone was the one she gave me. Yeah, that point of control still hasn't come down. There's still bids, right? We filled the single prints, right? This structure here, this area right here, right? When we took the high of H period yesterday, a lot of people are trapped short under 69.80. So we were under there just for a couple of minutes, right? There's 69.80. We were underneath it for 1, 2, 3, 4 minutes. So 4 minutes underneath, the rest of the time above it. That's another thing. How much time do we spend underneath a level? That's going to really help you. Because if you draw a line here and look how much time you've been underneath that line versus above it, some light bulbs should start going off. Right? Seller at VWAP, that's no surprise. So 78 and a quarter to 86 and a quarter, it was ugly, but it worked. Even if you made half of it, that's okay. You know, if you're long 81 to 84, that's fine. 3 points is fine. You don't have to buy the top. You don't have to sell the exact. You don't have to buy the exact bottom. You don't have to sell the exact top. Right? When you have a decent enough size zone, there's enough meat on the bone in that zone that you can make a few bucks. And that's all you need to do. Right? And that's it for today. Thank you, everyone. Have a wonderful trading day. I will see you later. Take only good trades. If you don't know what a good trade is, reach out to me. I will teach you. Okay? Have a good one. Trade smart. I'll check in a little bit. And remember, folks, don't take candy from strange market makers, okay? Be smart out there. See you in a few. Bye for now.